Hello, welcome. We are discussing economics with Dr. Rajapathirana. We discussed on many themes, and today we are going to discuss about stability and growth. Both these terms, I'm sure, is not new to Sri Lankans now, especially after the debt default that we went through since 2022. And what we need to do on stability and growth, and what does it actually mean? Let's evaluate and discuss with Dr. Rajapathirana. Dr. Rajapathirana, thank you very much again for joining with us to discuss and explain these theoretical terms and to show the relevance of those terms to Sri Lanka. Thank you very much.
Yeah, thank you for giving me the chance to talk about these things.
As usual. So, let's first understand what is stability and what is growth.
Yeah, so stability by what we mean in a discussion like this, stability of prices. The prices don't go through the ceiling.
Right.
That it doesn't fall. Both sides are wrong. I mean, if you have prices go up, inflation and deflation is also a problem.
Right.
So therefore, to keep it in an even keel,
right.
so that we keep it within a sort of within a certain margin, so that people can anticipate what prices are going to be. Because prices are the ones that are going to tell us exactly what is going to happen. We can see as the price is moving, which way it is going. Investors would like to know prices in advance, some idea. So stability is the actually ability to predict what these prices are going to be. Not exactly, but in that, if you like, in that park, but that area.
Understood. So I'm sorry, can I interrupt you
Please,
for a second?
Always. Yeah.
So now when you say it's the stability means keeping the prices, or ability to predict the prices, or there'll be less volatility in the prices.
That's right.
Since Sri Lankans have known for price controls, people may think, does it mean to keep the prices constant and like to predict it? Whether does it mean to impose price controls and try to keep the prices at the constant level? How do you differentiate?
That is a real no.
Okay.
Everybody knows, so people who have studied economics and people who follow economics know that price controls at the end will not achieve its purpose. It distorts things and could be disastrous to control prices. And many countries that have tried it have not. Hardly anybody in the world now control prices. Exactly. They know it's not going to work well.
Yes. Yeah. So just wanted to clarify. So what you mean by keeping the ability to predict the prices? It is mainly the overall the relative prices in the market.
It is both nominal and relative prices.
Both nominal.
First and nominal prices.
Okay.
Yeah.
So continue, Dr. Rajapathirana. Sorry, I interrupted. Just wanted to clarify.
No. Please do interrupt at any point that you feel that we should actually. So first of all, it's not like betting on a horse, but something more. For example, if price of say some commodity has been rising, we want to know why it is rising.
Okay.
And in order to improve the situation, is certainly not controlling prices. There may be extreme cases if there's price controls are extreme cases. If you are going to lose all our reserves one Sunday morning, then you control prices, but otherwise you don't. Actually. So let prices, basically we live in a price-oriented capitalist system, whether we like it or not. So prices carry information from the producer to the
consumer
and from the consumer to other consumers. And so it has a very important purpose.
Understood.
Prices carry most important purpose that prices have to give information about the state of a market.
So stability is stability of the prices.
Stability of prices within a particular, shall we say, two rates. Say, if you want inflation, you want your inflation, since you got into it, to be in the same ballpark as your competitors. Otherwise, you will lose your competitiveness. So prices, if you allow prices to rise, then your exchange rates also have to change. So it's much better to follow good policy, real monetary policy. Basically, monetary policy is the one that brings about stability, monetary policy, to keep it within a certain range.
So just to get it clarified, Dr. Rajapathirana, so what you mean by keeping the prices stable, as stability is basically what you mean by keeping the inflation predictable and low
Predictability of the price, to have some predictability of the prices.
of the
So
prices.
people are not surprised.
Exactly.
So if I'm investor, particularly if I want to invest in, say, clothing, if there's a possibility that clothing prices are, people are not going to buy these, then in that case you have no price stability. Price stability within a certain margin, to have the prices behave in a way, in margin, uncontrolled. Uncontrolled.
So basically, because in a market system on selected commodities,
Yeah.
not the relative and the nominal prices, but in select it could be rice, it could be steel, it could be cement.
Yeah.
For supply and demand reasons, there can be price the price there will be price volatility. But what you mean by keeping the stable prices is with the monetary policy, mainly with the inflation. There can be always ups and downs in prices, but what you mean is the nominal and the relative prices, and it has to be competitive with your competitors.
Now we have exactly the thing. In the last government, it happened to be last government. I am not making any argument for any government. Government was able to stabilize prices. By stabilize, for example, our prices rose, inflation rate rose to 70%. Unbelievable. Never happened before. But the central bank and having a low fiscal deficit allowed us to get to less than today 2%. So that's a huge improvement. Because if you have prices going up so much to 70%, your business will have to fail because you don't know what is going to happen next. So it should give credit to the central bank and the fiscal authorities to allow it to go down, not all of a sudden, but slowly, maybe not too slowly, going from 70 to 2%. That's a huge achievement. So we are stable that way. So we want to look at the prices that is prevailing in the market. Yeah? And you want to take the other item you want to keep an eye. It's called current account deficit in the balance of payments.
Right.
If your current account deficit don't jump up and down, otherwise then you lose reserves and there will be a problem. Keep them within an even keel in a certain band, and then you are having stable prices. You have a stable exchange rate. You can have some predictability.
Understood. So basically, just to summarize on what stability means is you keep your prices stable, prices in the sense the relative and the nominal prices, and basically the inflation low, and your balance of payment within that you call the range, or even the inflation within that particular range, so people can predict. There are no surprises in the market. You can do your business without any interruption with some predictability.
Yeah, I want to just say before one of the greatest economists that I have met, T.N. Srinivasan, he said, when you mean by stability, I don't mean stability of the graveyard.
Okay, right. Interesting. Yeah. So, okay, now we know what stability means and how it affects, for everyday work, for every citizen, what does it mean. So, what is then growth, and what is where should we be, in stability or in growth?
I think yes, a trade-off. I think you have to do both.
Okay.
But since we have to a large extent would become a stable country, a lot of people didn't expect, outsiders didn't know that we could go from 70 to 2% and the economy is great stability. I mean, in the last 5 years, we were able to achieve it. It's a real achievement. Actually, a lot of people who are independent, not people from this country, outsiders, they marvel at the rate that we were able to stabilize, and now we are ready to go to the next stage is to go to growth. Actually, without stability, you can't get to growth because you will be disrupted anyway.
Absolutely. As it was famously said, stability is not everything, but without stability, everything is nothing.
Yeah.
So you cannot grow without stability.
Yeah, because the worst thing that happens is the relative prices get affected. So you can't have, you'll have to, if you show me a country that has been growing rapidly, I'll show a country that has stable prices, basically.
Okay.
Yeah.
So what are the trade-offs? So you meant no country can grow without stability or stable prices. So what are the trade-offs when we move to growth? Do we have to compromise some parts of stability, or whether we can? I mean,
No,
is it an incremental step?
Yeah, your chances of growing are better when you
Stable.
become stable.
Okay.
That is very clear. That's
Right.
Yeah.
So when now Sri Lanka is in a important juncture where, as you mentioned, from 70% inflation, now the prices have stabilized.
Yeah.
And now everyone speaks about growth.
Yeah.
So how do we take that transformation, and what would happen if we only be in the same place without growth? We will be stable, but we may not grow. But what you recommend the path is you became stable and then also grow the economy.
Actually, having a stable economy gives a chance to grow. Without stability, prices get so distorted, real prices particularly, and then entrepreneurs, people who are investing in the market will not know what to do. They will be fairly confused. All of us will be confused. So the achievement we had to go from 70% inflation to 2%, less than 2%, is a great achievement. Well, then we can ask the question, as I have asked my Indonesian friends, how do you get to 70%? What were you doing that got you to 70%? Then they give reasons why it is the government want to do this, that and the other. They wanted to raise prices in some good, they can interfere in the market. So then there can be sudden movement one way or the other. So we should have never been in 70%. There's a famous story about Germany, it actually happened. That is that German inflation was so high that people used to order 2 beers at the same time, because when they finish drinking 1 beer, other prices have gone up.
So they're ordering 2 beers at the same time.
Yeah, right. Yeah.
Interesting. So what Sri Lanka need to do on this transition from stability to growth? I think you covered in the previous episodes to an extent, but since you are talking about from stability to growth,
I would say this, just to go back to, is that if we can get to a rate of price increase that is in the same range as our competitors, then we are okay. We don't want the change in prices to be zero. We want it to change. Because that is what it allocates resources. Prices have to allocate resources in a particular way. So that's why fixing prices is very dangerous, because you don't know there's no flexibility in that system.
So what Sri Lanka needs to do now on moving from stability to growth?
Well, first of all, make sure that we keep to the rates. Okay. I'm not saying that you should go below 2%. It's the rate that assume that the rest of our countries in this region, who are the people that we compete with mostly. See, if you can grow, if 4-5% inflation rate is okay. It becomes predictable. That's enough. So if we know for sure, I won't say sure, to a large extent, if we know that inflation is going to remain at 5%, we are okay. The market has told us that is what's going to happen. That's okay. So we can work with it.
So for Sri Lanka, Dr. Rajapathirana, any final recommendations from your end, or anything that you want to share on growth and stability, or stability to growth, than what I questioned?
Yeah, I think that if you have a rate of price increase, or inflation, which is another word for it, inflation, if it is steady increase, say 3, 4, 5%, it's okay for us. We can manage our business with it. People are not misled by prices, then they can follow it. And so you need probability for growth, because you lead out the initial conditions. If the initial conditions are good, if people can anticipate this, and they invest. If you invest, the economy grows. So you can isolate again prices from the fiscal deficit from the prices. You can have inflation, but what you can have fiscal deficit? No, I mean they are parts of the same problem, or the part of the same solution.
So any final thoughts for Sri Lanka? What we need to do? You basically have given to move from stability to growth. Because in your paper that you have also mentioned that why growth is important is also to attract the investment
Yeah.
and also to reduce poverty, because
Yeah.
only by growing the economy you can bring down the
That's right.
poverty rates.
Yeah.
So what we need to do is, you can say grow the economy, but how are we going to go there?
Yeah, I think it's a very important point there that you have raised is that remove the restrictions, take the foot off the brake first, and then you see what's happening. Then the central bank is there. Central bank, to me, it's doing a good job. They are the ones who are mostly responsible to bring prices down by monetary policy. If there's too much money growing faster than output, then you have a problem. So they try to keep the economy on an even keel. And today, newspapers, the governor says that there are other instruments also we have to use. We agree, disagree, we don't know what it is yet. But they have done a good job, basically.
Dr. Rajapathirana, I think this, when you say you remove the restrictions and let the markets work, I think some people have that suspicion.
Yeah.
Just because when you remove those restrictions, how could you assure that it will happen? Because I think people think while it says invisible hand will, all those things like how the prices comes to a equilibrium, some people feel no, you have to do something to get it going.
Yeah,
And how
yeah.
do you
Policy.
convince someone?
Policy.
Okay.
So you cannot, if the central bank does it good monetary policy, fiscal people, finance ministry does this thing, then we can handle those things as we have done. And many countries in the world have done. Some countries are famous for not having inflation for a long time. Other countries like Argentina is jumping all over the show. When I went to Argentina for language training, for example, within 3 weeks, the exchange rate went up from so many pesos to the dollar to so much per peso to the dollar. I was feeling very amused because as a World Bank person, I couldn't go to the market and change my currency. That's not proper. I should do exchange at the rate that the government has announced at that time. And so, so there are countries that are famous for inflation. Argentina is a very good example. It's bad government behavior. Huge fiscal deficit, borrowing money from everybody, but it's a fantastic country. They have one advantage that we don't have. They have huge resources and people continue to invest. Or the reason they are happy to invest, they are happy to give them loans because it can be paid back because of the huge size of the country, excellent facilities. They are exporting beef, cattle, whatever. It's a very, very well sort of a nice country to be.
Dr. Rajapathirana, any final thoughts before we wrap up on stability to growth?
Growth is more difficult than stability. Stability is the central bank and the kind of, but growth depends upon mostly private sector. If it were to work well, private sector, they should have assurance that the government is going to behave well. They are going to run monetary and fiscal policy well. Then growth will come. People see the opportunities to go and invest, and for foreigners to come and invest in this country. It's FDI, for example. We have remarkably low FDI compared to countries like East Asian countries. We don't have good inflow into Vietnam is some 40% of GDP. Yes. Come FDI. Because they are trusting the country that they will not do bad things to change prices rapidly and things like that. So that's it. I mean, both these things are important. But they have to work together.
Thank you very much, Dr. Rajapathirana, for joining us. Thank you very much again for joining this conversation. And we will see you with another episode with Economics with Dr. Sarath Rajapathirana.